And at 6:05 we'll kick it off. Just gonna mute us
Oh,
real
so you're
quick.
going live now?
Yeah, I have to go at 6. Or
Yeah,
else,
yeah.
the Facebook will kick the event.
I hear you.
Gotcha. So let me mute us. All right, Alex, how you doing tonight, man?
Jose, doing great, brother. Doing great, man.
Well, I'm glad to have you again to our weekly or every. We're trying to make it a weekly mortgage stories discussion. Last week we had a short week, so we didn't come on. But today we have a special guest again, Alex Sanchez, mortgage loan originator with First Alliance Home Mortgage, my mentor in this business, and somebody who has plenty 20 plus years of experience doing this work. And like I said, he's a wealth of information, and that's why we have him on every week. There's anything you want to start with, Alex, before we really get into it, go ahead, man.
Now, Jose, thank you so much for the opportunity to host this broadcast with you, and I appreciate the opportunity, definitely.
Great. All right. So today we're talking the pre-approval process and how someone gets pre-approved for a mortgage loan. Essentially, the idea we want to help you or guide you visualize how it is in the mortgage process and how it is walking through it from pre-qual to contract, and even we'll talk a little bit about from contract to close. But essentially, Alex, I'll start you like this. You have somebody walk in, they said, hey, first time you talk to them, maybe they walk in the office or maybe they call you and they say, hey, I have a realtor. They told me maybe get pre-approved. Maybe go get pre-approved so we can start the home shopping process. Where would you start with somebody like that at this point?
Yeah, and I'll tell you what, when I get that call, I get happy because obviously they're actually they're not putting the carriage in front of the horse, which is what usually happens with first time buyers. Sometimes you have builders that they'll show houses without knowing if the buyer is approved or not. And what happens is that they'll get all their emotions in a bundle and psyched up about a house that possibly they can't afford. And so when I do get that call, Jose, I love it because I know that they're not putting, like I said, they're doing things the right way. But how I go about it is the first thing I do is I definitely I try to set a meeting with them or if not a webinar, because it's not about talking about the rate and what they qualify and whatnot, because I mean they can do that online. I mean, they can just click on Google mortgage pre-approval and they can do everything online. But that's not what it's all about. It's actually explaining the whole process from A to Z. And that's what happens with a lot of loan officers. That's where a lot of loan officers, they drop the ball, where they don't explain that. And they just go ahead and they, okay, what's your social security number? Okay, let me see. Okay, let me run your credit. Okay, credit score is good. Okay, here's your pre-approval, and that's it. And they send them on their way, which it sounds good. Yeah, it sounds good because they got a pre-approval in 10, 15 minutes. But they really don't know what they're getting themselves into. So it's really, that's where I started, Jose.
Gotcha.
It's really setting, meeting with them and seeing what their goal is, seeing if their expectation it really matches their pocketbook or their pockets, and we take it from there.
That's a great point that I want to piggyback off. You made two amazing points. The first one is, they meeting somebody like us originally up front, even before you speak to a realtor, is ideal because now you know what you can get. Right. And that goes into your second point, which is, we can do a quick pre-approval and send you off, but we want to have a conversation. We want to get to know what those goals are. What are your goals for the next 5 years to see if this mortgage program makes more sense for you than this one, versus than just taking the information and just speeding through it, which is, I say, and I know you agree, is the lazy way. It's the quickest but laziest way. Having a sit down, having a conversation, you kind of gauge where that borrower, that consumer's objectives are, and you can kind of cater the process a little bit to them with that. Because I'll give you an example. What's the point of calling somebody, and let's say you don't have this conversation and you just speak through it. What's the point of calling somebody at 10 a.m. every morning when they're at work, they're at a site or they're at something? Having that conversation, you avoid these communication problems. I find.
Okay. If you don't mind,
go ahead.
If I could just share something really fast, because it's just fresh. I literally just came from an appointment right now, and it was actually a referral from a realtor out in Florida, and they referred me these buyers, and first time buyers, young couple, and I was actually the third lender they
work with. Gotcha.
And off the bat, their main thing was, listen, we already have 2 pre-approvals, and we just want to see, the realtor told us to talk to you because we want to get, you got better rates and stuff like that, and the bottom line is that the rate that they were already getting was pretty low. So it was something that I said, listen, that it sounds like you're getting a good deal.
Yeah.
And they were like, okay, well, and I told them, you're getting a good deal. They were getting, just to give you an example, they were getting a 3.1, and I was at almost 3.5, 3.5. Okay, which is, so I said, listen, you definitely got a good deal. I asked them, did your loan officer sit down with you and go through the whole process? Oh, no. So I already knew that they didn't know anything about points, right? They didn't talk to you about points. Well, it ended up being that they did have the loan estimate, which they never read. They had. So I said, listen, send it over to me. And they were getting a 3.1, but they were paying 1 point on that. They didn't know that they were putting 5% down on an FHA loan. Once I saw that, it was listen, you guys are not shopping around for a rate. You guys should be shopping around for a mortgage professional. And forget it. Just to make it a long story short, I walked out with the deal. I mean, it was definitely
that's a great story, and that's a great thing that happened there, because it's a perfect segue for our conversation. A lot of times I speak to borrowers and they say, oh, I got this letter and they're giving me this rate, and I said, hey, what did the letter say? And it says, oh, I'm pre-qualified for said rate, et cetera, said program. And that brings us to the next topic that I always like to discuss with borrowers early on, and where there's a big misconception is the pre-approval versus the pre-qualification. I had a close friend of mine, a fraternity brother of mine, mentioned that he had some kind of offer, and I said, send me that information, maybe I can match it, similar to your story. And what he sent me was it's a pre-qual. They didn't go anything further than just ask him a few questions, and they'd offer him that rate. And I go, hey, that's just essentially good marketing, really, because the difference between a pre-approval and a pre-qual is the verification of everything that you discuss in the conversation. The pre-qual is just a conversation, Maybe you want to elaborate more on that.
Absolutely. Oh, absolutely, and definitely, Jose. I mean, that's the big difference, a big misconception. A lot of buyers, they go out there, and sometimes a lot of realtors don't even know. Sometimes they'll go out, spending their weekends working on a weekend, showing houses on a pre-qualification, and basically what a pre-qualification is me having a conversation with Jose Torres over here, and I said, Jose, what's your credit score? Oh, well, everyone has great credit, Jose. I got great credit on a 700. Okay, 700. What do you make? I make 100,000. Okay, having a quick conversation on a qualifying conversation, and based on your verbal qualification information that you gave me, you're pre-approved for this much. And it doesn't stop there. Like Jose just shared. I mean, it goes further. It goes more in
and we'll continue there, because the next point, we have the conversation, we consult with them, we find out what their wants and needs are, and then we go on to, for us to get a pre-approval, to use the term correctly, we're going to need to take a 1003 application, and we're going to need to verify everything that's listed on those the 1003 application. So, that's step number 1 or 2 after having the conversation. Knowing what you want, you need to put that application down on paper so we can verify all those things that we always talk about, like Alice, that goes into that. So maybe you want to elaborate more on the 1003 or talk about what the 1003 is.
Right. No. And again, going back to number 1, I mean, the only reason you're having the conversation before taking the application is because you want to see, where they're at, where they think they're at. Sometimes a lot of buyers, unfortunately, they think they're at a 700 FICO score and credit score, and they're not. Or sometimes they think they make $100,000, but they really don't, because that's not what's reported at the end of the year. So the step 1 is to have that conversation to see what exactly they know about their own finances. Step 2, like Jose mentioned, is the 1003, which is the application for you to apply for a mortgage. Now we have to put all that everything you said to us in paper, but it's not only a verbal. It's okay. You make $100,000. Okay, let me see a 2-year tax return, pay stubs, everything you told me in step 1. Now we have to document. Now you have to back it up with documentation, and that's where everything begins. And you have a lot of people that I have a lot of clients that they'll say, buying a house nowadays is difficult, right? I mean, I remember like 15, 20 years ago, it was snappy,
Yeah.
and my response is actually no, it's not difficult to apply for a
Yeah.
mortgage. All you have
It's
to do
not.
is just verify what you're saying. You document
Yeah.
everything you're telling me. If you
Yeah.
make $100,000, just show me. Just show me
Yeah.
a paper that you make that money. If you have a 700 credit score, show me. Let's look at the credit report. That's it. As long as everything you're telling us is documented, there's not going to be any issues with the process or with the approval.
And these things are put in place to protect you, the consumer. So
Absolutely.
it's the 1003 application it's not tough. It takes 10 to 15 minutes, but at the end of it, you have to verify everything you put on it.
Right.
So if you say you make 80K a year, well, we need to verify that, and income verification is one of the most important aspects for me of getting a pre-approval. Because I want to know what you can borrow, so I can send you out there to shop with confidence. And that's, for me, income verification is huge. And we spoke about it many times. You can do that with pay stubs, offer letters on your salary. There's a couple of ways you can prove that, but generally pay stubs, W-2 are good ways to start in verifying that info. So many times I will ask you for pay stubs or W-2. Maybe even your tax returns up front before you even go shopping for a mortgage.
Right.
But trust me, this is going to save us time down the road. It's going to save us headaches down the road, and it's going to save us possible big problems and possible litigation down the road.
Absolutely.
Because I've seen it go bad already,
Absolutely.
Mm-hmm.
Jose, and one thing that I do want to just point out is, especially now with this whole pandemic that we're going through, and the number one. I don't know if you experienced this, Jose, but I've experienced that the number one for me has been the employment. You have a lot of people that unfortunately in 2020 they were furloughed and they kind of forget that they were out of they were furloughed for 6 months.
Yeah.
And they've been with the company for 5 years, 7 years, and they were furloughed for 6 months, maybe 8 months. That's going to make a big difference.
Yeah.
That's going to make a big difference in your approval. And sometimes they forget to mention that. Sometimes they'll forget to mention, there was a gap in my employment, even though it was because of this craziness that we're going through. But it's something that has to be mentioned. Sometimes you'll have buyers that have in a 2-year period they have 4 or 5 different jobs, and they don't even remember when was their start date for one employer, let alone 5 different employers. So that's information that goes in the mortgage application, the 1003, in order for us to determine if you qualify or not.
Yeah. And
like Jose mentioned, this is giving you the confidence to go out there and put an offer on the house with all the confidence in the world.
And again, you guys, we take the 1003. We're not living your lives, so we need you to be as accurate as possible with this, so we can calculate the right numbers and get you the right information, so you can make those decisions moving forward on how much you want to spend. Because again, we can pre-approve for 500. You don't have to spend that, but we're gonna get you what you need once we have that discussion. So, all right.
I'm sorry. Employment is one of them, and also what I've also seen is savings.
Yeah.
Now more than ever, they want to see reserves. They want to make sure that you're buying a 2-family house, and you were furloughed last year for 6 months. With everything that went on, that you can evict your tenant. Well, nowadays they want to see reserves. You're buying a 2-family house. What if your tenant doesn't pay? They want to see that you have some side of reserve. So why do I mention this? Because when it's time to take the application, my advice is that if you're being asked, how much you have in savings, what's total? What do you have in savings? It's not that the mortgage professional wants you to spend the whole everything you have. They just want to see how much reserves you have. So you may need $10,000 for the down payment, and you may need $8,000 for the down payment. That's $18,000 in total, and you only have $19,000 in your account. That's going to be a little, that may not work.
Favorite question during the consultation is that one, because I always like to see their reaction. It's like, for some reason, it's a defense mechanism. It's like, it's almost like if we're coming after their money, and it's like, no.
Oh, say I've had situations where they'll tell me, well, we just count with 30,000, and I explain it to them. Then they'll come out with like another $20,000 that they
Yeah.
just didn't want to tell me because they thought I was
No.
going to make them spend the money. You know?
And that's why speaking to a mortgage professional is essential, because the more you show, the better chances, better rates, everything's better.
Absolutely.
It raises your profile. Your net worth is important, guys. It does raise your profile, and in terms of reserves, it might help you not even need that if they see you have 120 in the, you know. Yeah. But that's one of my favorite questions, man, because they always go, King's and it's funny, but all right, we'll continue with for pre-approval. You know, basically, guys, we want to get a real good understanding of your financial stability or your financial status at the moment. So that's why we request pay stubs, bank statements. If you tell us you have, $30K saved, well, we want to have that ready in case we need to show a lender, hey, this guy's serious, in layman terms. So these things we're going to ask for up front. And then with that, we can produce a pre-approval letter with the amount that you can borrow. And then now you're on the next step. You're what some people believe is the best part of it. I think, moving to your home is the best part, but the shopping aspect of the mortgage process. And I don't know if maybe you want to talk about anything, what you're seeing currently in the market, slowdown, things like that, in terms of the shopping, the housing market at the moment.
Absolutely. And before I do comment on that, I just want to go back to number 2. I'm sorry, Jose.
Go ahead. No.
One thing, once we have a complete 1003, which is the application, the mortgage application, obviously the mortgage professional, we go ahead and we do all, based on our experience, and we read guidelines and everything like that. But what closes the deal for us is that and what sets us apart from all the other loan officers and all other mortgage professionals is that we actually take that pre-approved file and we submit it to something called desktop underwriting. So it's literally being reviewed by a Fannie Mae, Freddie Mac underwriter. All the documentation, everything is being reviewed, and the idea here is for us to get it approved, to get it an approved eligible. Once you have an approved eligible, it's literally been seen by an underwriter. Yeah. So that's a step. That's something that makes us different. That's something that we bring to the table, is that not too many loan officers will include a DU approval with a pre-approval letter, and that's what Jose and I we're pretty much accustomed to doing that. Jose, I know you've become a master on DU approvals and
I think that's an advantage we have, that the directness we have as direct lenders. We don't have to broker our files or deals out or your mortgages out. We can do everything in-house, and it gives us a leg up because everything gets done quicker. It's seen by fewer people, so it's worked on more consistently. I think generally that's the advantage I have, and believe me, having DU approvals on my pre-approvals are fantastic because I'm confident with those numbers that you guys gave. I verified now DU has approved you with. I'm confident you guys are going to go out there and buy what I know because of these approvals, these things that reinforce this pre-approval provide. It's security for me as a business professional, as a mortgage professional. I feel more secure with that.
Absolutely, because a big misconception of loan officers, what people have is that they think that we're the ones who's going to approve the loan. We're not. We don't approve loans. I wish I could, but we're not.
I would approve everything.
I would approve everything. We're pretty much bank representatives. We're loan officers. Okay, our job is to take all this information and turn it into a deal. A deal that's going to make sense not only for the bank but also for the buyer, for the borrower. So we can't approve any loans. That's why it's good to get it reviewed by an underwriter before you go shopping, because the underwriter is the one who does approve the loans. So that's just a little.
Oh no, and I want to piggyback there. A lot of this stuff, we're heavy up front on getting you a pre-approval, and we're very important on the front end because, for a while there, we can't be involved, legally, ethically, obviously we can't approve our own loans, guys, or we can't go out and appraise the home or be responsible for that aspect of it, or even be part of the lawyering. We're completely out of most aspects of this deal, but we're very important to the beginning of it because like I said, we want consumers. We want our borrowers, the people that have faith in us, that come to us, to go out there to shop with confidence. And
I always tell my clients and my realtor partners, I always tell them, listen, my pre-approvals don't take 5, 15, 20 minutes. I take 2 to 3 days. Sometimes I take a week. Depending on, each case is different, but sometimes, you have files that have 3 or 4 different applicants and they all have, red
tricky
flags.
Ones,
it takes time. It takes time to put everything, so it's better to wait a week for a pre-approval with a DU approval than a pre-approval letter that took only 5 minutes as a pre-qual, as a verbal. It's more confidence,
Yeah. No, and no, I have one more point on this topic. I've run into borrowers who are not experienced in buying homes, and I run into borrowers who are very experienced in borrowing home. I had a borrower give me a zip file with everything she ever has, and she constantly updates that. Wow. And it's, her pre-approval came in 48 hours because I verified everything quickly, guys. So her pre-approval versus somebody who takes a week to give me a pay stub, and guys, it's only as organized as you are, we can work. So if I have a borrower like that, like literally give me a zip file, 12 documents in it, constantly updating it, it makes everyone's lives easier. So it's a little bit of that first conversation we have. Yeah, that first conversation, guys, is very important. Like, people say, "Oh, I got a question. They feel bad. I said, "Don't feel bad. Let's go. Give me all of them right now, because I want to know as much as possible about my borrower so I can better help them."
Right. And that's exactly what I tell my clients. And going to the next step is already the house search. But before I send them out, I tell them, listen, if you have any questions, if you want to know what your mortgage payment is, call me. Call me. All I need to know is 2 things. I just need to know what's the sales price and what's the property tax. That's all I need to know in order to tell you what your payment is going to be. And you'll be surprised how many people they'll say, the advice that I give them was when they're house shopping, you'll have a buyer that is approved for $500,000, but they only want to spend $350,000, and they want to make an offer on that $350,000 house. They want to lowball it, so I explained to them how we're not in the market to lowball an offer. And second, my advice to them is that keep in mind that, and this is a rule for everyone. I mean, this for every $10,000 increase or decrease on the sales price, we're only talking about $20, $25 difference in your mortgage payment. So if you have let's say you have a $400,000 house, and you want to make an offer of $390,000, that's $10,000 difference, and your payment is only going to change by $25 a month. My advice, what I tell all my clients is, don't lose a good house for $25 a month. That's the way you got to look at it. And so what do you mean $25? I'm paying that if you consume that in 30 years. Yeah, I get it, but for $10,000, you're not losing $10,000. You're not. It's $25 that you got to look at. If you were paying the house in cash, then it would make sense. If you were paying the house, you weren't financing, you want to pay the house in cash, then yes, $10,000 does make a big difference, but not $25,000.
Plus, if you work with us and Alex, we're going to be there in a year, 2 years from now. If you want to refi, we can help you work and lower that payment eventually. Anyway, a small sacrifice to get a property, a home of your dreams, versus losing a bid because you wanted to be cheap on an offer. Come on, guys, it's clear as day where you're going with that. But so the market for right now is still pretty hot. From what my real estate partners are telling me, I had a few conversations today. They said they had a wild weekend. Many showings, a lot of people at them. And I saw today recently some news items came. Mortgage buys are up for this time of the year compared to previous years. Obviously, we're gonna throw last year away, but even before that, this year mortgage rates are up. Coming off a pandemic, mortgage buys are being up is surprising to me. So there's still a lot of activity.
There definitely is, Jose, and I've noticed that I don't know. I don't know what about you, but I've noticed that it's actually stabilizing. It's starting to not be as crazy as it was last year. Where houses were,
in terms of the overpaying, that's not happening.
That's already coming down, and I'll share this really fast, Jose. Is that I have a file, and I still can't believe this, but they're buying a house. It's a house in Bloomfield, and it's a single family house. Purchase price is $390,000. I didn't think it was going to praise. I thought it was going to maybe be a little tight.
Yeah.
For whatever reason, obviously, I know years of experience. I kind of knew, and I was totally wrong. The house came in praised. Jose, I'm not making this number up. $445,000. So this client is actually buying a house with $50,000 of equity
already
in there. So it's like
established
it's
equity.
So why do I share this? Because now appraisers are starting to be more flexible. And also the market demand is starting to kind of like it's still strong, but it's not. People are not going crazy paying $50,000, $60,000, $70,000 over asking price. So it's
I had a similar situation. Not that much over the appraisal, but $20K in equity from day one ain't bad.
That's crazy.
And
last year, I wasn't seeing that last year. Last year,
no.
Last year people were paying $40,000, $50,000. It was coming appraised at that price. But
wow, wow. Rates are still super low, guys. By the way, just want to mention that article came out. Still to this time, at this time of the year, rates have never been as low in the last 2 decades. As of September 15 for this year, going back to 2 decades, has never been as low as now. Overall, generally, averaged overall refi. I'm not talking about one specific rate, but overall mortgage rates are the lowest it's ever been.
It's amazing. It's crazy what these rates are at, man. I remember when I bought my first house, it was 7.5, and that was a good score, Now we're talking about 3.5% interest rates. That's crazy.
Yeah, and look at this. I'm just reading off the wire. Mortgage News Daily. Purchase applications spring back to April levels. So there's a lot of purchases are happening at this time. Inventory is going up. This is a good time for us in our business, but also a good time for consumers to get out there and buy homes, guys. Inventory is opening up. People are still trying to sell to take advantage of these low rates and to cash out, whether they're older or not. But it's a lot of activity going on, and it's still going on in the process. In this market.
Jose, what have you seen in your experience? What have you seen the turnaround time for buyers to go into contract from the time that they're pre-approved in their house searching? Like how long of a gap do you see? Have you seen that?
It really depends on each specific shopper, but I'm from my conversations I'm having with realtors, 2 weeks, 3 weeks, nothing crazy. A couple weekends now, they'll go see 1 or 2, and they've been getting, like I told you a couple weeks back, I got 2 weeks back, I got 3 contracts back in a weekend. So, that was like 3 weeks ago. I think 2 of them are almost out, but yeah, it's picking up in terms of things are moving faster for realtors. They're happier, obviously. But yeah, purchases are definitely increasing in that speed, that timeline from the guy borrow. Like my sister, I think she's locked down. She made an offer. We might have that accepted. So, she had exhaustion. She came back recently and now she got something. She's already putting the contract together. So I definitely see it increasing, that timeline increasing.
So based on that, what Jose said, so let's say 3 weeks, let's say a month, even a month and a half that you have to wait, that your house searching, depending on what you're looking for and your expectations, what needs to happen, what doesn't need to happen in that 1.5 week is what I want to talk about, because a lot of buyers they think. A lot of borrowers, they think, okay, well, I'm pre-approved. We're good. We're solid. Jose gave me that DU approval, and I said it's good, so we're good. That's right. That's correct. But that doesn't mean that you can't just drop the ball on your finances. You still got to stay on top of your credit. You still got, I've had situations where they, the borrower, they'll call me up. Hey, listen, I want to go to Bob's and, start ordering some furniture for the house. I'm like, oh, whoa, wait a minute. No, don't. Yeah. Or, they'll say something like, I lend money out to my friend and now he's going to, pay me back the money, and I want to go ahead and deposit cash in my account. No, my advice to all my clients is what I tell them is, call me, whatever financial decision you're going to make or move, call me, because I need to approve it, because there's some, you could have a 640 FICO score, 640 credit score, and you submit one payment, you're under 600 easy.
Absolutely. So 100%. And that's a great point, because once you get a contract together, it's not over, guys. There's some things that happen. There's time that's gonna elapse in between from you getting that contract to you moving into your new home, and that's something I want to briefly touch on, because to my knowledge, I haven't spoken much about this process on Mortgage Stories or even my real estate podcast, but I want to bring it up here, and I'll bring it up on screen now if you want to take a look. Processing. Once we get a contract, guys, it's not over. You decide, you negotiate a price with your realtors. They get a contract together. You have an attorney represent you. They put together a contract. It comes back on your desk, Alex. What's next? I mean, help guide us through this. What a customer would expect.
Right. So you have your contract. You put an offer. The seller's accepted, and now it goes in the hands of your attorney. Obviously, you have the right to choose your own attorney. Your realtor can recommend one. We can your loan professional can also lend one, refer one. Then once it's with the attorney, they have 3 days to do an attorney review. During this time, you want to do an inspection on your house. You want to make sure if there's any repairs. You want to see if you can negotiate that. If it's major repairs, if it's something small, minor repairs, you're not going to negotiate that. They want to make sure that all the terms and all the conditions on the contract is well put and it's the way it's supposed to be. And that takes 3 days for an attorney review. During this time, what I do is that I start. I'm working with the borrower. Okay, Mr. Borrower, it's time to start working on your mortgage. Send me your updated pay stubs, your updated bank statement. Let me start updating your file. Once that 3 days is over, I'm already disclosing the file. So what does that mean, disclosing? So disclosing is pretty much I'm going to go ahead and send you the legal documents for you to sign, stating all the terms, the conditions, what your interest rate is, the years that's going to be fixed for, what your monthly payment is, how much you're going to need for closing, for prepayments, for reserves, and all this is this would be the second seminar second webinar that I would do with the borrower, just to review the terms, conditions. Okay, you're good with everything. Okay, great. Here, I'm going to go ahead and email you the disclosures. Go ahead and e-sign all these documents, and then once you sign these documents, I can start with the mortgage process. Once I start with the mortgage process,
let me stop you right there really quick, Alex,
brother, okay.
Because I think disclosures are an important topic that need to be touched on really quick. Disclosures are an important part of the process in terms of its visibility, its transparency. It's made to protect the consumer. It's also made to protect the integrity of the transaction, because a loan estimate or disclosure is essentially a legal document sent from our company to you, disclosing and listing all items as estimates at this point, because we're still really early on in the process, but disclosing what your mortgage may look like, including up to all items. That includes, paying for the appraisal. All that stuff is listed in there for you to review and sign and approve for us to continue. It's almost to review for yourself to know what you're going to pay for, so you're not getting yourself into trouble legally, financially. So, guys, very important, because I just want to harp in on this, because I had a borrower not look at this disclosures. After I coached, I said, guys, look at this. It's important. And they called me today with a concern about a fee. And I said, hey, guys, a month ago when we discussed disclosures, I said, if you had any questions about this, please let me know. We had to redisclose after we handled the situation. But the point is, every time, guys, that a term changes or anything changes in this mortgage or in this file, this deal, however you want to call it, we have to disclose to you legally by law.
Absolutely.
We have to show you, so you're not duped, essentially, really. But it's also legal protection for every party involved.
Well put, Jose. You know, absolutely. That you're 100% correct on that. Is that sometimes, sometimes when this is not explained the right way, what happens is sometimes the loan officer can make a mistake, or sometimes they just maybe their skill level is not to where it's supposed to be. Sometimes they don't disclose everything, and what happens is that you'll have the day of the closing, the attorney's calling the borrowers, telling them, hey, listen, you need to bring a check for $30,000. Well, wait a minute. My loan officer told me it was only $20,000. Where does this extra $10,000 from? Well, there's extra fees, and that's where the whole confusion comes in.
Yeah,
that's stuff that we eliminate at disclosures, like Jose mentioned. We go over everything. We want to make sure that you understand everything, and then once you sign, like Jose mentioned, you're accepting those legal terms. Again, it's estimated. So what we do is that we actually estimate slightly higher. Okay, and what I mean by that is, like, going back to that scenario, instead of your attorney calling you and telling you, hey, listen, you need $30,000. Well, guess what? You only need $25,000. Oh, wow, that's great, because Jose told me it was $30,000. That's great. That's awesome. That's so it's.
Well, look at this, Al. I had a situation where we had estimated, I think it was $550 or something, $600 for the appraisal, right? And all of a sudden, when the nature hits, we get a storm. Now, an appraiser had to go back out to the site to check it out after and do another inspection. Well, guess what? Our conservative estimate, that little over, worked out because it's still within that barrier. So that's one case where it worked in our favor because of Ida. We had to send inspections for flooding and all that, but the estimates still played into our favor. But the long story of short is, guys, this we disclose it for your purposes, for your transparency.
Yeah, it's too difficult to calculate actual fees in the beginning of the process because first of all, we don't know who your attorney, what your attorney is going to charge. We don't know what title company you guys are going to use. Hopefully, you'll use our title company, New World Title.
Yep.
But if you don't, you can also shop around for a title company. We don't know what the fees are, so we have to estimate that. Sometimes you have to escrow for 4 months instead of 3 months. Sometimes you have to. I've had situations where you have to escrow for 6 months, and for those who doesn't know what escrow is, pretty much your prepayments. What you have to pay up front, your taxes, your insurance, etc.
Yeah. Yep. So that happens, guys. The attorney review, I think we were on. That happens. That comes out of attorney review, and for us, it goes into processing.
Then so once we disclose, once the borrower understands all the terms and conditions and they accept it, we go ahead, we submit it over to the processing department, and the processing department it's divided by two parts. It's actually called the BP1 and BP2, where pretty much my BP1, which is I have two processors. So the first processor, they take the loan. They pretty much underwrite everything. They want to make sure that every step is in there, every T is crossed, every I is dotted. They go ahead and they, usually it takes 2 days, from the time you to disclose to submit to a process. We take a week because we pretty much we're doing everything legit, asking for letters of explanation. Explain this to me. Call the buyer. Once it's submitted to underwriting, it gets approved and it comes back with maybe 3 or 4 conditions. Yeah. That's it. You have loan officers that they go ahead and they just
throw everything
together. Then they send it over to processing. Processing does the same thing. They submit it to underwriting because they want everything fast. And what happens is that you'll get it approved, but then you have like 2 or 3 pages of conditions. Yeah. Now that's now the fun begins for them. Yeah. So for us, it's different. For us, we get a mortgage. It's something called a mortgage commitment. We pretty much we're committed to giving you this money, as long as these 3 or 4 conditions are met.
Yeah, guys, and I want to touch on conditions because I've had 2 borrowers recently just exit the conditions phase of the processing for their mortgage, and I had one of them say to me one time, he was a little frustrated. He goes, "Oh, I'm jumping through hoops." I said, "Yeah, brother, they're giving you $300,000, bro. you
Yeah.
know,
You know what? You know what, Jose? That's funny you say that because that's the way I always say to my client.
they are giving you hundreds of thousands of dollars, and all you have to do is produce a bank statement or something. Guys, conditions are there. It's a risk that they're taking to give you this cash to finance your purchase. So they want to see you commit a little bit. So getting them some documents for them giving you $300, I think it's an even trade, personally.
Yeah, absolutely. I like how you put that together, Jose.
Yeah,
if it was your money,
exactly.
if you were lending that money,
you would probably, yeah. And if I didn't pay, you'd probably come take my hand. They have to. It's a risk that they're taking giving money. They don't know you. They don't know you're a good man and you take care of your family. But they need to kind of know. So this is how they do it. They ask you for things and documents and to prove this, to prove that. And do you own this? Do you own that? But want to jump on that because BP1, when she gets involved in the file, a series of events kick off that sometimes take a week, 2-3 weeks, depending on the kind of collaboration we get, because we order the appraisal. She orders the appraisal at that point. She orders the inspections if it's needed. She orders the title work to be done, title search. She helps even helps you process and get your homeowner's insurance together. There's a lot of things that happen in this stage that, for the most part, it's out of the loan officer's control. And I always try to guide my borrowers through it because I'm the point of contact. They're going to call me. But I had good experiences recently with the appraisals and the FHA, even VA appraisal. Pretty good experience recently. I'm talking about 4 to 5 day turnaround, Alex. So I don't know from your experience in the last 7-8 months, that I don't know how that compares, but for me, it worked out pretty well. So the appraisals are happening quicker than they were a few months back. The inspections are coming back quicker. Unfortunately, if you're going through the process now, you had to get an IDA inspection, is what we're calling it. Yeah. They had to go back and check for flood damage because of the storm we just had. But all of this stuff happens within and again, it can happen in a week. It can happen 2 weeks. It depends on circumstances. It depends on collaboration between all the parties involved.
I do agree with you, Jose. I mean, appraisal has increased in speed as far as getting ordering your appraisal and getting a schedule with the realtor and getting it done. And it has it's been like more than 4 or 5 days, which is much better than what we were going through in 2020. Keep in mind, 2020, we were going through the whole COVID thing, so a lot of people didn't want the appraisal. They didn't want anyone to come into the house, so they it was a lot of having to deal with that and do we had to do underwriting appraisals, and it was a big difference. So I mean, definitely now things are speeding up, and the most important thing is that they're coming. These houses are being appraised at a good value, so that's a great thing. So once we have I just want to touch on this because a lot of people clients will say, I spoke to the appraiser. He says that the inspection was done on Monday. He'll have the report out by tomorrow, which will be Tuesday. But what this is the way it really works. The appraisal will have the report ready by Tuesday. That means he's going to submit it back to the appraisal company. Yeah. Okay. The appraisal company has to check his work, make sure that the report is legit. It's a legal contract. So they take 48 hours. So it takes them 48 hours to review the report, make sure everything is good. Then it gets sent back to our company, to the mortgage company. So we are talking 3 or 4, maybe 5 business days if everything is. And if there's no issues, if there's like repairs, like if you have any, if it's conditioned for repairs or maybe the value, they're having issues with the value, then you're looking more to maybe 2 weeks, maybe.
Happened to a file recently of mine, so I
really. That's right.
Yeah. It's been a team effort. I went down there and one day and helped them. I mean, we got to do what we got to do for our borrowers. But they had.
Wait, you actually went and helped them out?
Yeah.
Wow, look at that.
Yeah. Me and the twins.
Look at that.
So we went over there. They went over there, and we took care of it. The appraiser came back, gave us the okay, and
shout out to the Cortizo brothers, man.
Yes, sir.
These guys are hungry. I'm telling you. Shout out. But so once the appraisal report comes in, that's when we can go ahead and that's when the underwriter they'll go ahead and they review everything, and everything checks out. They'll issue out something called the mortgage commitment, which is the approval, the official approval.
The official approval.
The official approval. Once that's issued, then it goes into our second processor, and she's the one who pretty much works on these 4 or 5 conditions that's needed, and that's going to be, it's a team of the processor and our assistant, and my assistant is the one who's going to contact the borrowers for any documentation or anything that's needed. So once they have, once title is in, once all the conditions are in, we can go ahead and submit the file back. They submit the file back to underwriting, and for a turnaround of maybe 48 hours, 24, 48 hours for a clear to close, and another 24 hours to schedule the closing.
Yeah. And from there, guys, it's the happy times. Once we get a mortgage commitment and we work our way past that, we get it clear to close, and it's pretty much the end process for the borrowers, not for us, because we would like to stick around and at least follow up with you. We like to do our jobs. We like to know our borrowers. Like I said, I like to know my borrowers up front, and long term. I want to maybe in 20 years help their child buy the first home. That's one of my goals, actually.
Absolutely. Now, guys, one last thing I do have to add is that I just explained the whole mortgage process in what, Jose? What was it, like 10 minutes or 15 minutes, maybe?
20 minutes tops.
Maybe 30 minutes. Let's say it took me 30 minutes. Guys, I wish it was 30 minutes to take it from A to Z to closing. It's not.
It takes time.
Okay? We just a real timeline to close a deal. And this is if all the conditions are in, and there's no issues with appraisals, and we have a buyer that is on top, like Jose's clients that they have everything in the file, and they any document we request, it's sent the next day, and you can close in 28, 30 days, easy. It's not always the case. It's case by case. So I have buyers that they don't have everything in a zip file and a PDF file. They don't even know what PDF is. They don't even know what So they need conditions. They need pay stubs. I have buyers that have direct deposit, and they're like, "Well, pay stubs. I get direct deposit. I'll give you my bank statements. Oh, I need to see the pay stubs. What do I get? That they have to go to human resource, and so it's a process. So if I send them an email on Monday requesting 1 month pay stubs, and they're sending me pay stubs of 6 months ago, that's not going to work. So by the time I sent this email out on Monday, by the time they go to the human resource and it gets all figured out, 3 or 4 days went by. So that's the reality. Can we close in 25, 30 days? Absolutely. I'm very confident. I know we can, because I've done it. Is it every
likely?
Is it all every scenario like that? No. I mean, a lot of them, I'm going to say maybe 60-70% of my clients, they need to have their hand held and assistance, and they have to work directly with my assistant to get documents in. So I've had to actually go to their houses and pick up documents because we needed the documents ASAP. So it's
about cooperation.
It's all about communication, because
communication, cooperation, and sometimes compromise. I think those are 3 key words for that. I have collaborative clients that work with me well. They have better time working with me or working through this process. I have that are not as collaborative. They have a tougher time, and it's like you said. Sometimes they're going to have to walk them through it, but that's part of the job. That's part of what we do.
And if you're working with a realtor that doesn't cooperate, it makes things worse. I'm lucky. The realtors I work with, I love my realtors. They're great. Like the realtors that I work with, they also go out of the way. Sometimes they'll say, "Hey, listen, just have the client come over because they live nearby. I'll scan over the documents." I love my realtors.
Man, especially the ones that I've been working with. If you survive the last 2 years in this market, God bless you, man. You guys have made a thick skin because
Yeah,
I'm telling you, brother. You know, even though some of the files I've worked with, you know, I could tell if I was in their shoes, I'd be like, Jose, you mother f, you know, just cause it's so roll of a dice with you know, a borrower and a purchase contract. It's really a roll of the dice. It could be the appraisal. It can be the inspection. Oh, now it's, you know, we got to check for flood. It's a roller coaster, guys, and that's why, you know, those questions up front, having somebody walk you through it, having somebody guide you with confidence, somebody ethical who cares, is completely important.
Jose, a lot of people don't give realtors a lot of credit, but I'll tell you,
Yeah.
you know, these realtors are they earn their money. I mean, you think about from the time that they get a prospect.
Yeah.
Because that's what they get in the beginning is a prospect, someone that's interested in buying a house to the point to the time that they actually get pre-approved.
Mm-hmm.
And then once they get pre-approved, they're out there house searching for, you know, every weekend out there. You know,
almost on hope.
Houses. Man,
that's what I'm saying, Alex. It's almost on hope and praying. It's like almost like they're like hoping something happens. And this is why I said, man, you got to have really thick skin in that industry, and you got to have really, you know, just a strong will to stick with it, you know, to stick with a borrower, to stick through, you know, oh, this is going on. Because there's going to be times where, you know, you think it's going to close here. You're expecting it. You're planning 2 weeks from now to go on vacay. And then now guys, this is a rough industry, man. Treat your realtors well.
Yeah, you know, love your realtors because they, you know, they're sent from heaven. And the reason why I was sharing this is because I, you know, advice that I have for especially first time buyers is, you know, we have the reason why realtors are not being appreciated the way is because of this company called Zillow. so it happens where, you know, they're working with a good realtor. The realtors out there committed, you know, showing houses every weekend and, you know, and answering questions, answering phone calls on a Saturday or Sunday, you know, and then, you know, the buyer goes on Zillow and they'll start doing their own research, you know, and then what happens is they'll see a nice house and they'll go click on on that listing agent. What happens is, okay, now the listing agent is going to show them that house. They like the house, and guess what? Now the realtor, the buyer's realtor that was actually representing the buyer and doing all the work,
he's out.
Pretty much out, right? So my suggestion that what I tell my clients is, you know, don't jump ship, guys. You know,
it doesn't benefit you. It really doesn't.
It doesn't benefit you. It doesn't benefit you because you're a buyer.
Yeah.
You need a realtor to represent you as the buyer.
Yep.
If you work with a listing agent, who do you think they represent? The listing agent represents the seller, the homeowner, the one who's looking to sell the house. What do you think they're going to? You think they're going to negotiate a house for you? No, their responsibility is to sell it for top dollar. You need a buyer's agent to represent you.
Oh yeah,
100%, and try to negotiate. Okay, listen, let's maybe not the price. Let's negotiate. You know, I don't know.
A lot of people don't realize, Alex, that the seller pays for your realtor.
Yeah,
they don't realize that. You know, that doesn't. You know, they, like I said, they're helping you on faith. You don't pay them really, technically. You know, almost like our commission comes from the lenders and it doesn't come from our borrowers. We don't get paid by you guys easier. We're almost you know. Almost advisors to you in a sense,
right?
They're dealing with you. They're showing you houses on good faith and love of what they do. The good ones.
Yeah.
You know, I always said if you're chasing it just for the money, then you're not in the right business.
Absolutely,
you know?
absolutely.
But
absolutely. No, yeah, I definitely advise guys. You know, for any first time buyer or any buyers, you know, definitely stick with your realtor. The realtor's there to represent you and any questions that you have, I mean, like I said, the realtors that I work with, I mean, you know, they're God sent. I mean, they know how to work. They know how to work. And if anyone is out there and they're not happy with their realtor or they're looking for a realtor, call me. I can refer you.
We know really some good people,
professional realtors that will definitely accommodate you to what you really need.
Yes, sir. So I think we have pretty much covered a lot here. I know we're gonna have another conversation maybe in a week about closing costs, reserves. We're gonna go really into detail on what the closing costs are, what are reserves, what are prepaid costs, prepaid finance charges. A lot of this terminology we'll get into next week. or possibly the week after. Maybe we do a twofer into another subject, but we want to keep these mortgage stories coming and keep giving you this great information, guys. Alex, thank you for coming again, and I'm sure we're going to be doing this pretty soon.
Okay, thank you so much for having me, guys. Please contact us if you have any questions or any mortgage scenarios. We're always here to give advice, and thank you for listening.
Take it easy, Alex. Good night, man.
Take care.
All right, guys. So another episode of Mortgage Stories has ended. I want to thank for whoever tuned in. Again, we're trying to grow our audience. I know we're starting off slow and small, but this is what I expected. I want to continue to grow this audience. I want to continue to expand and make this better for you guys. So any advice or input on how we can do this and make this a more entertaining show and better content for you, just let us know. Thank you for tuning in. You have a great night.